Welcome back. You're watching Chartbusters here on CNBC-TV18. Now, reports are saying that the microfinance self-regulator, MFIN, has deferred the implementation of limiting the number of lenders to 3 per borrower by 3 months. Now, this new timeline with effect from the 1st of April. Now, we have Alok Misra, who is the CEO and director of MFIN, who's joining in now to discuss more on this in detail. Mr. Misra, good morning. Thank you so much for joining in and wish you a very happy new year as well. Now, could you first confirm to us whether you have deferred this by 3 months, and also could you elaborate on the rationale behind this move, because the announcement was made just last month?
Yeah, thanks for having me here, and wishing you all at CNBC team a very happy 2025. So let me put the things in perspective. When we issued the guardrails 2 in November, it had 7 covenants, from underwriting to KYC to lender cap to overall cap on indebtedness, which were adopted by the industry. Now, out of the 7 covenants, only one, that is the lender cap from 4 to 3, that has been deferred instead of 1st January to 1st April. And why so? Let me explain you the rationale. All the other 6 are going ahead from 1st January. Only one is being deferred. If you remember, in August, we had issued the guardrail 1.1. In that, we had capped the lenders to 4. What we got from the field after we issued the guardrails and from the feedback from the institutions, the regulated entities, was that the changes to the IT systems, the business rule engines and all that takes time. And to do it right now from 1st January, when they have already done one major change in August and September, that would be a little troublesome and can create some problems in implementation in the field. So that's why we have given some time, that is 3 months, and from 1st April, it will be on. All other 6 covenants, from underwriting to KYC and reporting to credit bureaus and all that, whatever was there in the guardrail, that kicks in from 1st January. So no major change.
Mr. Misra, good morning and good to see you in. This is Nigel on this side. So you're saying that because of various reasons, you've pushed it down by closer around 3 months. The fear though, sir, that Q4 could be very, very good for some of these lenders in terms of growth. But on asset quality, there's a bit of a worry that's looming. Ain't you worried about that?
See, let me again, because put the things in perspective. Number one, what the field reports which we are getting for December, though I am yet to get the credit bureau data, in the December, there is marked improvement in the efficiency, collections efficiency. The quality is getting better. Second, when you say that this will lead to, if we postpone it by 3 months, it will lead to some more asset quality. So it is not so, because the lenders of their own, because of the credit quality issues and the liquidity drying up for NBFC-MFIs to a large extent, are already going a little bit slow in disbursement, and they are already cautious. Third, the guardrails, when we bring it down from 4 to 3 lenders, that only affects hardly 2.5 to 2.8% of borrowers. That's not significant. So I don't think a 3 months is going to make any change in the field level asset quality.
Okay, all right. Mr. Misra, we take that clarification on board. My colleague Abhishek, though, he has a few questions for you. Abhishek, please go ahead.
Well, Mr. Misra, over-leveraging still remains a key concern in the microfinance sector. How will that get addressed by, deferring by 3 months? And as you said, the proportion is really small, but the pain is very huge. If you take a look at the asset quality of lenders, over the last 6 months, or especially in the first half, has deteriorated massively, and they have guided for further deterioration in asset quality as well. And we are hearing about news reports of frauds that have been happening. So how will the quality of loans get improved if at all the guardrails would have been placed today versus deferment by 3 months?
No, Abhishek, I think I don't agree with your last part of the statement. That is frauds and news reports and all that. I have not heard of, we get constant field reports from the field. I have not heard of any fraud, minor or major. Number one, let me put that on record. Second, when you talk about over-leveraging the microfinance sector, which is at present of 4 lakh crore, including banks, SFBs, NBFCs, and NBFC-MFIs, is a very small part of the total financial sector in India, which is around 170 lakh crore. Still, the number of rules which we apply and the number of precautions which we take in underwriting are enormous compared to the other sectors. And if microfinance clients, part of it, that is 5%, 6%, get overburdened, it is not only the microfinance, because microfinance gets the blame because they are primarily our client, but there are other lenders who have no restrictions getting into our segment and lending to the microfinance client, that is the retail overlap and other things. That is also a cause of overlending. So in our underwriting, because we cannot do anything about it, so what we do is we are trying to cap the space for microfinance as much as possible for us to do that. And that should bring down the over-leveraging concerns in 5 to 6% of clients. Other than that, practically if you see, if we defer, if the lender cap, as I explained earlier, from 4 to 3 was going to affect, say, 3% of clients, and in the situation when the liquidity is tight and you say credit quality concerns are there, institutions have already taken steps to strengthen their underwriting. They are not going to lend indiscriminately, and they already have a liquidity shortage. And 2.5 months to 3 months delay, I don't think that's going to cause any extra concern on the asset quality.
Well, sir, if you remember, some time back, there was a, cap with respect to the spreads that a microfinance lender could earn. Now that spread cap has been removed and lenders are free to charge their customers. Do you agree or do you concur with the fact that putting back the cap on, the spreads that a lender can make, that would also lead to some kind of improvement in this system?
No, you are confusing two things: over leveraging and interest rates. Over leveraging is a different part, interest rate is a different aspect. Now, coming to interest rate, when you say the 22 in 22 the interest rates were deregulated, that was only for 35% of the sector, which is NBFC-MFIs. The 65% of the sector was already deregulated; it was never under interest rate cap. Only thing which RBI did in 22, that for 35% of the sector, which is NBFC-MFIs, it leveled the playing field. And when you say deregulated, also deregulated doesn't mean that it is free for all. Deregulated means that you have to have a well-defined board-approved policy, which is subject to RBI's regulatory scrutiny. And that is why you would have seen that the interest rates, despite the deregulation, have remained range-bound. And if you compare with other sectors who are lending in the similar segment, they remain the lowest still.
Well, thank you for your time, Mr. Misra. Back to you, Nigel.
Okay, all right. Thanks a lot, Mr. Misra, for joining in, and Abhishek for joining in this particular interview. Well, for the time being, I'll tell you what, we'll slip into a short break. We come back, we'll continue to focus on markets and stock-specific action. Don't go anywhere.